mortgage rate buy-downs are making a comeback as home buyers face high interest rates. This also means some sellers are finding themselves making more and more concessions in an effort to get their homes off the market. So here to discuss the trend is Taylor Marr. He is the deputy chief economist at Redfin. So Taylor, this is really interesting because I had never actually heard of buy downs before. Usually you hear about sellers making concessions, but this is different. Explain.
Well, thank you for having me on, Anne-Marie. It's great to be here. As you know, this is a really important time to talk about the housing market. It changed dramatically last year as interest rates rose and really priced millions of buyers out of the market. So right now, buyers are getting creative. They're working with Redfin agents to do all kinds of things, such as how can they afford this home when interest rates are 6 or 7%? So they can put more money up front to buy down the loan, and this temporarily reduces their monthly mortgage payment. That can be a great way to afford a home, especially if your income is rising. You know you're going to be in the home for a long time. But there are other things that they're doing as well. As you mentioned, they're getting concessions back. When they're making an offer, they're negotiating with the seller to get amounts, $50,000, $40,000 to pay down their mortgage rate, to fix a roof and do all kinds of things. So that's really helping buyers right now.
So I want people to sort of understand, though, the difference between a buy down and what you're sort of bringing up, which is maybe I've called it a seller's assist. What would a buy down look like? So you have a little extra money to put down on the down payment, and then over the next 3 years, what does your interest rate look like, for example?
Yeah, so there's a lot of different types of buy downs. One of the most common that's being thrown out right now is a 2-to-1 buy down. And so what this means is you're buying a $500,000 home, you might put an extra $10,000 or $20,000 to temporarily pay down your mortgage rate. So if you're getting a 6% mortgage rate, for the first year, you actually get a 4%. And then that goes up to a 5%. And then it stair steps up to a 6% in year 3. And so you basically pay money up front to reduce your mortgage payment in the meantime. Can be great if your income is growing rapidly and this will be a big win for the savings for the next year or two. But you do have to put a lot of money up front. Some buyers are increasingly kicking that over to the seller to say, hey, why don't you pay for this and I'll buy your home? And that's working out for a lot of sellers and buyers too.
And so the buy down is something you would negotiate with your lender. And the second half of it, if you can do it, would be a seller's assist that you would negotiate with the seller. And for people who maybe are unfamiliar with that, can you explain how that concession might work?
So there are a lot of different ways that we hear from our agents on the ground and how they're working with customers to get them to buy a home. So some sellers have to drop their price, and that has been more common. About a third of homes have dropped their price recently. Increasingly, buyers are able to get it for below asking. About half of homes recently sold for below asking. But sometimes they need a little bit extra to really make it work for their monthly payment. And so they can say, okay, I'll offer you $480 on this home, but I also need an extra $20,000 to make this work. Or the inspection brought up that this roof needs repaired. I want the seller to pay for that before we can close this deal. So that's what buyers are negotiating. In some cases, on new construction homes, they're throwing in things like $80,000 or the chance to win a new car. So this is a way that sellers are trying to get buyers to entice them to close the deal, to buy the home, to sort of sweeten it for especially their mortgage rate. A lot of times that money is going towards these buy downs and paying points on a loan as well.
People getting really creative. So we saw during the pandemic, though, when housing prices were going higher and higher and higher, it wasn't like that across the board, right? Some places were hot markets, some places weren't. So where are we seeing some of these concessions happening?
So listen, the pandemic-fueled housing market frenzy was concentrated in a lot of these pandemic boom towns. Those are mostly out west, places like Phoenix, Boise, where a lot of Californians were moving in due to remote work. And so these are also the same markets that have cooled rapidly when rates rose, and they're increasingly having to come up with concessions to get buyers to be able to buy the home. Prices are cooling fast in these areas. And so this is also where we've seen not only the biggest increases, but also where buyers are having a little bit more power right now. In fact, this is a record 10-year high amount of power that they're able to get with getting these credits, these seller's assists, as you call it, and really help them to in a really challenging, affordable market.
Interesting. So get out there if you're looking for a home. This might be the time, despite the interest rates. Taylor Marr, thank you very much.
Thank you for having me on.